Good morning, good morning, good morning, everyone. All right. Are you hearing me? Are you guys hearing me on Clubhouse? All right. We are ready to go. All right. Thank you, sir. Thank you. All right. All right. I got the wrong camera on. Hold on, folks. Let me change cameras here and get that all done. Boom. And there we go. Oops, wrong one. And so we got that. All right. Oops. All right. Let's see here. There we go. Excellent. All right, we're moving in the right direction now. All right, so just want to make sure our sound levels are okay and everything is working correctly. So, moderators, how we doing? All right, Kurt, how's everything on your side?
Things are good. I cannot hear the moderators.
You can't hear Clubhouse?
No, are they talking?
Right, they're talking. All right, so
No.
let me see if I can fix that. Hold on.
In StreamYard, do you have the mic set to? Yeah,
All
you
right.
do. Yep.
Okay. Yeah, that's it. I got it now.
Okay. I think I hear them now.
All right, there we go. We should have everybody now. All right. All right. So, folks in Clubhouse, can we hear you now?
Yes, we can hear you. Everything's good, Don.
Okay, good. Can you hear me now, Kurt?
Yes, we can. Yes, we can. We're good.
So sometimes it goes back to the default settings, and I got to set it up all over again. All right, folks. Again, listen, my name is Don Daniel, founder of P.I.L.L Method International, a better way to eliminate debt. And you're in the P.I.L.L Method Club, and the room is how to pay off mortgages in 7 years, but not just mortgages, all of your debt. Listen, I want you to know that you do not have to pay these mortgages and these student loans and car loans the way that you've been taught. You can cut your interest costs by 75%, therefore paying off all of your debt in 7 to 9 years. We're going to be talking a little bit about that. We're going to be talking about what do we do specifically to cancel interest. I mean, meaning how much money do you need? How much money does it take to cancel a ton of interest? And the number is different for every individual. How to find out that exact number to the penny. That's what isolating the principal amount is in P.I.L.L method. P stands for prepayment of principal. I stands for isolating the principal amount, leverage, and then liquidity. But understanding how much to pay and when to pay it is crucial. All right. And we're also going to be talking about the rising interest rates and why you are better off with a higher interest rate than a lower one. We're also going to talk about, oh man, they're considering 40-year mortgages and 50-year mortgages more and more. Do you know a lot of companies already give 40-year mortgages? And I'm trying to tell you, if I could get a 40-year mortgage, I would jump on it with both feet. I'm going to tell you why today. Jarrett, let's give these people some good information.
All right. Hey, what's up, everybody? And welcome to everybody streaming on YouTube, Facebook, LinkedIn, and Twitter, as well as in the Clubhouse room. Welcome to the best room on Clubhouse. We're really excited to have you here. You're going to get some amazing information. Whatever platform you're on, whether you're on a streaming platform or Clubhouse, we'd love for you to share this room. This is super important information for your network, your community, because we're going to save you so much money with this concept. And we're going to be able to answer your questions live on the stage or live on the streaming platforms so that you can come away with a better financial strategy for 2022 and beyond. And you can understand how to save 75% of your lifetime interest. So without further ado, we're going to get right into it. But one thing that's super important is interaction. So if you're in the audience on Clubhouse, we'd love for you to raise your hand, come on stage, and ask about a refinance, ask about your mortgage, ask about a 15-year versus a 30-year versus a 40-year. Call Don out, be like, how the heck is a higher interest rate better? I want you to show me. Car loans, student loans, credit card debt. The more interaction in this room, the better for you and the better for the audience. So please come on stage, ask questions. We'd love to see that hand raising button light up. And this room is for 2 hours. So the sooner you get on stage, the better the chances you'll be able to get your question asked. And if you're on YouTube, Facebook, LinkedIn, and Twitter, the sooner you ask a question, the better the chance that Don can get to your question. All right. So this is being streamed on YouTube. So if you go into the chat, you'll see the instructions. You can go to your laptop, iPad, or desktop and type in ice10kvideos.com, and you will get the live. You'll see a panel on the YouTube channel. Click the live button, and you will be able to see on live. All right, great. So with that being said, thank you to the 7 people that shared the room. Keep on sharing the room to Clubhouse. We really appreciate the support, and we're going to go ahead and jump right into it. So we're going to go through some moderator introductions, but before we do, Don, would love for you just to give an introduction and just let people know what they can get out of today's room first.
Well, listen, what you're going to get out of today's room, folks, is an insight into the Asperger's mind, because Asperger's is a mild form of autism. And when what we're going to be talking about is how I look at amortization schedules. It's not from a math perspective. It's from the fact that I see pictures and patterns that most people don't see when I look at an amortization schedule. And it just makes no sense to do it the way that the banks have set it up. And I realized that there's absolutely no education on how loans actually work. So with my unique insight to this, we've developed a whole business model around it. All right. Not just education, but oh my goodness, a fantastic computing system that takes this to the very next level. Artificially intelligent computing platform that is cloud-based. And you log into it just like you log into online banking. But this system takes you to a whole different level in understanding opportunity cost, how you can get the biggest bang for your buck and stop paying all of that interest by moving the right amount of money in the right month on the right day of the month to the right loan, and then eliminating the maximum amount of interest per dollar applied. You see, it is all this interest that turns 30-year loans, that turns mortgages into 30-year loans. You know, there are cars out there that cost $150,000, $200,000. Guess what? You can't get a 30-year mortgage on a car. These cars have to be paid off in 6 or 7 or 8 years. So if you can pay off a $150,000 car in 7 years, how come you can't pay off a $150,000 house in 7 years? Why does it take 30 years? Oh, we're going to get into this thing today, and we're going to amaze you with this information. It is the only education on the subject on Clubhouse, on YouTube, or anywhere else for that matter. And there is a book by the same name, The P.I.L.L Method, a better way to eliminate debt. It is the only book out of 33 million titles on Amazon that gives you insight into how to beat the bank at their own game, how to understand amortization schedules, and how not to pay all of that interest. Folks, you're in for a treat today. I'm looking forward to talking to each and every one of you. And if you got a question about mortgages, about should I buy a house now? The interest rates are going up. Listen, I want to tell you right now, we're going to show you how to take advantage of situations that look bad, but I'm telling you, they're actually putting you in a better financial situation. Let's find out how. Let's go, Jared.
All right, great. So yeah, please raise your hand, come on stage, and keep sharing this room. But let's get into it. Don's about to put an example up. If there are no questions, but we'd love to, cancel that example with a real question. So feel free to raise your hand. Don't be shy. But my name is Jared Alberton. Been in tech for over 15 years. Do a lot of content around tech, NFTs, crypto, and the metaverse. If you're interested, check out my replays in my bio. Check out my Instagram, my LinkedIn, or my Twitter. All right, I'm going to pass it to 10K Cards.
Super good morning, family. How are you? Founder and CEO of 10K Cards says the number one digital business card on the planet. Our goal here is to support Don in this room, and most importantly, inspire everyone. If you're getting value within this room, bring your friends, tell your family, get them in the room. You don't go along this journey by yourself. With that said, back to you, Jared.
All right, Credit Goddess.
Hey everyone, happy Sunday, happy Easter. My name is Rose Laura Lewis, also known as Credit Goddess. I'm all things credit and the official credit expert for the P.I.L.L Method crew. If you have any credit related questions, feel free to come up on stage. If you don't have a mortgage and you are curious if it's the right time to purchase a home with a rising interest rate, ask Don how it's much cheaper to get it with a higher interest rate than a lower interest rate. But thank you guys so much for being here, and pull out your pen and paper and get ready.
Good morning, good people. My name is Kenyatta. You can find me at kenyatta10k.com. And I am really passionate about helping you get generational wealth brewing. And I do this by helping you find a deal as a realtor, helping you finance that deal as the official lender of this house, the P.I.L.L Method room, canceling the interest because I'm down with the P.I.L.L Method so we can do it all over again. You guys tap in with me. There's some exciting new things brewing. 40-year loans is one of them that I am able to assist you with on your investment properties, as well as hobby lending. That's right. I can lend you up to $50,000 on hobbies and businesses right now. So connect with me and I'll show you how.
Well, that's new. I didn't know about that. Okay.
We'll wrap.
That's good. I love that. All right, Jared. I'm excited to get started.
All right. So, Sonja, do you have a question for Don to get the room kicked off?
Sure. So I just got his book like 2 weeks ago, and then I read it, and then I went on his simulator and filled in all my information and etc. And I just did my house because I just wanted to see, because I kind of thought he was a little crazy, but we won't tell him that. Anyways, I've been paying a half a payment extra each month on my house, but then I used his little simulator and put all my information in. And actually, with Don's method, I'm going to cut my loan on my house by 3.5 years and save almost $12,000. So he's not so crazy after all. So my question is, Don, can you do it on cars too? Because yesterday we went to go get a new car, and they offered us an 8-year loan on a car. I was like, wow. And I just smiled because, wow, I'm going to save so much money.
Listen, you have we sent you out a savings report already?
Yes, you have.
Okay. And it was 2 pages?
Yes.
All right.
But
I'm going to pull that up. Okay. What are you going to say about that now? Go ahead.
To be honest, I only put my house on there because, you know me, I'm like an investigator. I have to make sure what I'm hearing. Not saying that Clubhouse is like all bad. There's some great information like yours on there, but you know, you got to do your due diligence and make sure what's going on is true.
And you're exactly right. And let me tell you, you want to put, when we see a bunch of consumer debt, you're actually better off putting all of your debt on instead of just one. Once we explain it to you, this is why you get a consultation. You're able to ask a ton of questions before deciding whether you want to become part of the P.I.L.L Method family. So no one, do you know how many people come to me and say, Don, I've seen your stuff on YouTube. I just want to sign up. I said, nope, you cannot do it. There is absolutely no way you can go on our website and purchase our program. Did you know that?
Yeah, I tried.
Yes.
You told me no.
No, it can't. You can't purchase our program that way because we have to do an analysis for you just to see if it's going to be a right fit for you and whether we could save you any interest or not. So once you do a savings report and then you start to learn about how we do it as opposed to how you've learned how to do it over the years, there's a lot of uneducating we have to do so that you can learn our system. Everything about the old system has to be thrown out. So you said, oh, so the more debt I have, you're thinking the worse off I am. Nope, not in this system. We want all of the debt into the program, and we'll show you why you're better off by putting it in. That's the kind of thing that we're talking about. So yeah, what did you have? What question did you have for me in particular? Other than yes, you can put your car loans in, you can put your student loans in, credit cards. If it carries interest, I want to know about it. How about that?
So my question is, Don, like in previous, other circles where
Yeah.
they say pay off the lowest debt first and
Mhm.
build your way that way.
Yeah.
I only put two things in your system,
Yeah.
which today I will go in and fill out the whole report. I just want to see. But is that the same way you look at it? Because when I was reading how it works and stuff, that's not always the case. And I want to know, why is that different in this situation where you're not paying off the smallest debt first, but you're paying other things off first?
Oh, well, listen, the reason why is this. Can you see, can you actually see our example on screen? Because I can put it on screen. I can actually show you because are you actually from Missouri? Because Missouri is the show me state.
No, I'm not from Missouri. I'm in Texas. And actually, I can't see it because right now I clean STR, so I'm cleaning and listening and learning.
Okay. So here's what we're talking. Let me give you an example of what I'm talking about when it talks about doing what you're explaining is the snowball method. Okay. And if you have a debt that has, you say, okay, let me start from the smallest to the largest. And you knock that small debt out. All right. And then you feel pretty good about that, don't you?
Yeah, I guess so.
And then you take that.
I want to know the best way to save money, though.
I understand. Listen, I'm getting there. All right. And then you take that money and then you put it on the next smallest debt. And then you knock that one out even faster because the money you were paying on that first debt, you're now taking that money and rolling it into the minimum payment of the second smallest debt. And now you're paying that one off even faster, correct?
Yes.
And then when you pay off that second one, now you're taking all that money that you're gaining, you're snowballing it, and now you're going to do the third debt and get that done even faster. Now, here's what's happening while you're doing it that way. All right. You're paying off debt where you look at the interest cost that month, maybe $20 or $30. And by paying off those, you're killing those $20 and $30 interest payments. And then you might move up to one that's costing you $50 a month in interest. And then you're knocking that one off. And then you can move up to one that's costing you $60 in interest. Do you see where I'm going with this? You're knocking out all of those smaller debts while you're leaving the one for last that's costing you $700 or $800 or $900 a month every single month. And the debt snowball says that's okay. You're killing the small cost, but you're leaving the big cost to last. You're feeling good about knocking off these small debts and leaving the one that's costing you the most for last. Why would anybody do that?
Well, that's the way we've been taught until we get the P.I.L.L method.
Right. And so here's what I'm going to put on the screen now. Let me go ahead and share this screen. And we're going to go do that. And we're going to cover that. Now, you can watch this in the replay. All right. So we've got John and Rebecca Jones here, and they have they've got 3 loans in here. We're going to pull them up, take a quick look at it, and they have a mortgage, they've got a car loan, and they have a credit card. And so we are loading that in right now, and there we are. So we have here the mortgage is $200,000 at 6%. We have a 21% credit card, but they owe $2,000 on it. And then we have a $25,000 car at 4%. Okay. So now let's just assume, and I can tell you right now that if I scroll down in my program, I'm starting out in February. If I scroll down, I can see that the program wants to pay off the Visa card first. All right. So we pay off the Visa card first, and we can take a look at the minimum payment on the Visa card. We knock out that minimum payment of $50.88. We're no longer paying that to Visa. The debt snowball says, take that $50 and put it on the next best loan. Now we have 2 loans left. We have an auto loan of $25,000 and we have a mortgage of $200,000. Based on what you've learned in the past, we should put that $50.88 and add it to which loan, the mortgage or the auto loan?
In the past, it would tell you to go towards the auto loan.
Exactly.
But after reading your book, why would you put more money on a depreciating asset versus an appreciating asset? So I'm thinking it should go towards the house.
But, that's one way of looking at it. But what we should be looking at it is the way we do everything else. Everything else we do is based on cost, isn't it?
Yes.
How much does this cost me? And if I do things based on cost, then we can take a look at things a little differently when it comes to loans. We have totally been conditioned not to look at cost when it comes to loans. So I'm going to ask anybody, do you know how much interest you're paying each month? Add it all up. How much interest are you consuming each month? Most people don't know. Do you know the individual interest costs on each loan that you have? Most people don't know. We're taught to ignore that. Everything is based on cost. So let me go back here and take a look at what we have here on my screen. And we're going to go into settings, and we're going to go to preferences, and we're going to take a look at how we can look at this. Now, anybody who wants to see this, who just came into the room, how can they see this? So Jared or Kenyatta?
Yes, if you want to see this information, if you're near a laptop, iPad, or desktop, go ahead and open that up, open your browser, and type in ice10kvideos.com, and you'll be taken to Dom's YouTube channel. You'll look for the panel that says, or the box that says live. Click that, get the commercial, and you'll be able to see Don in the studio. If you want to see these instructions written down, feel free to go into the chat, and I wrote those instructions out as well. Back to you, Don.
All right, thank you. So here's what we've got going on, folks. We're talking about a traditional view of killing debt. We've got the debt snowball, where we pay off the smallest balance first, and then take that money that we're no longer paying on that that loan, and then taking that and putting that money on the next smallest loan and knocking that out. So we're getting these small wins, getting that psychological boost every time we pay off a debt. Okay. But, and then there is the avalanche method, which means we attack the highest interest rate first, knock those out. All right. And knock off the highest interest rates. And then we can save money and then get out of debt that way. Knock off the ones with the highest interest rate, or knock off the ones with the smallest payment. the smallest amount owed. All right. So both of those methods work in canceling debt. Both of them work. They will cancel your debt in a lot shorter time, but they are highly, highly inefficient. They are so inefficient, it's crazy once you start looking at the numbers behind those decisions. So let's take a look at, I'm going to go over here to program focus settings. We're going to take a look at how our program is set up. And right now, all three loans, if you can look at the upper window, all three loans are going to be paid off in 7.7 years. That's a 30-year mortgage, the $25,000 auto loan, and the credit card. All of them are going to be paid off in 7.7 years. Why? Because we focus on this window over here. The fact that we're going to save this couple $275,000 in interest that they will not have to pay. If you focus on the interest cost first, that drives when you can be out of debt. Now, if you don't do that right, you can pay a lot more interest than you need to by focusing on the wrong debt. So we've got this thing on automatic. We can change it from automatic because it says here, I'm going to make this just a little bit bigger for those who need it. And it says here, when the focus is set to automatic, the program will automatically optimize the order you pay off the debts to become debt-free. You may change the focus setting. However, this could have a negative impact on your overall results. Could have. All right. So what we're going to do is say, you know what, program, I don't want you to make the decision. I want to use the debt snowball in this program and then watch what it does. So we're going to change and focus on, we have a 5-year, 60-month auto loan in here. When I make this change, we will pay off that 5-year auto loan in 2 years. We're going to knock off 3 years and pay off that auto loan in just 2 years instead of 5 years. That's got to be great. So when we tell the program that, I'm going to click on auto loan. We're going to totally focus on the auto loan. All the extra money we have is going to go towards the auto loan. We're going to make minimum payments on everything else. Watch what happens. Watch your 7.7 years. Watch your $275,000 in interest savings when I go to auto loan. It went to 7.8 years and went from 275,000 down to only 273,000. We're going to pay this car off 3 years early, and it's actually going to cost us $2,000 in extra interest to do it. How does that work? Can anybody tell me, anybody in the audience who would like to come up and say, or give their thought as to why it's going to cost John and Rebecca Jones more money to pay off the car loan 3 years early? Anybody? Come on up. While you're doing that, I'm going to get set up here. Let me take it back to where it was, to automatic, and I'm going to give you the answer. So now we're back to automatic. We're now paying off in 7.7 years. Our potential interest save is back to 275,000. And now we're going to go into accounts and take a look at the auto loan. I'm going to click on the history here on the auto loan. And over to the left, you'll be able to see that the principal payment on this auto loan is $377.08. The interest payment is $83.33. Okay, so now we're going to break this down a little bit more. All right, I'm going to open up a calculator here. We're going to put that $25,000 auto loan. So we're going to even, I'm taking this a little bit deeper than I usually take it. At 4% for 60 months. And our payment is exactly $600 $460.41. We're going to go back into the program and see that, yes, it's $460.41. So let's go and let's break this loan down. All right. We're going to take a look at this loan and see that $377.08 goes to principal, $83.33 goes to interest. Every single month, we pay less and less interest, more and more principal every month. You see that? Loan payment number 5, payment number 6, a little more principal, a little less interest. So if we start attacking this loan aggressively to pay it off in just 2 years instead of 5 years, let me give you an example of what can happen when you make payment number 1. Okay, let's make this just a little bit bigger. All right, when we pay payment number 1, we're already done for this month. The payment for next month would be $378.33 and $82.08 going to interest. So here is what I want to point out. If you take this loan and pay the $378.33, the principal payment for next month, if you pay it early, before the first of next month, do you realize you eliminate line 2 from your payment schedule and you save the $82.08 in interest you never have to pay? And your next payment for this car is actually on line 3. That's how it works. To get rid of one full payment, it takes $378.33, and you can save $82.08 in interest. That's how you pay off a loan early, folks, is saving the interest cost, because remember the days when you could get a 0% interest on a car loan? Let me ask you, Shauna, if you could get a car loan at 0% interest, is there any financial benefit to paying the car off early if it's at 0% interest, Shauna?
No.
No. All right. So the reason why we pay a car off early is not just to get rid of the debt, it's to save on the interest. That's what's really going on. And I'm just showing you how we could save on these $80 interest payments, right? Okay. So while we're doing that,
So wait, can I ask a question? Because you're like super smart, and some of us are a little slower than you.
go ahead.
When we're paying that extra money, are we paying it towards the principal only, or are we just adding it into the payment?
All right. Now, when you pay early, all the money goes to principal. If you wait to the first of the month, or when your car payment is due, you will pay some of that money goes to principal, and some of it goes to interest. But if you pay the money before the payment is due, all of the money that you pay, I don't care if it's $1 or $2 or $5 or $1,000, all of that money goes to principal before the next payment is due.
So when we call in to make a payment, because on a mortgage, I was always taught you make your payment and then you do a principal only payment.
Yeah.
If we're doing like a car loan, do we just make the payment early before its due date?
Exactly.
Or do we need to specify?
Well, there's only one place you can put that. The reason why you have to specify it on a mortgage is because most people escrow their payments, meaning the taxes and insurance is actually rolled into the mortgage. And so when you're paying extra, they want to know, do you want that to go into your escrow account, or do you want it to go on mortgage, on your mortgage principal? That's why you have to tell them, I want this to go to principal. Or if you go online, they may have a line that says, let's put this money, you can have a principal only payment. So if you put your money on that line, then that tells them, I want this money to go to principal and not to my escrow account. Does that make sense?
Yes, it does. Thank you.
When it comes to a car loan, there's only one place it can go. It can only go to principal. So you don't have to make that. You don't have to call them up and say, I want this to go to principal. It has to go there.
So what about credit cards? Or is it the same with credit cards as a car loan?
Exactly the same way as a credit card. So any money you pay before the next payment is due goes to principal, because that's their timing. Their timing is they charge interest at the time of you make your next payment. Okay, so if you have a 0% balance on a credit card, and let's say you charge it all the way up, you max it out. Okay, but in that first 30 days, and you pay off the entire payment, the entire balance within that 30 days, you pay no interest. Okay. So this is how we can get around that. But if you carry that balance over, now you're going to pay interest for every day you owe that money. And they calculate that, and then they charge it on on the day you have to make the next payment. That's when they charge you that interest. So here's what you want to do. If you want to pay a loan off early, what you're thinking about is not how I can pay down the principal, but what happens when I do? How much interest can I save? So watch this. So we're talking about the total amount of interest on this loan, $25,000 loan. The total amount of interest that could be charged is $2,624.60. That's it. On a $25,000 auto loan, if you paid it off today, if you paid it all off at their first payment, all you could save is $2,624.60. That's it. So let's go back to the program and take a look at this. So while I'm paying off this auto loan in 2 years instead of 5 years, watch what happens when I go back to the accounts and I take a look at the mortgage. Okay. So while I'm focused on the car loan for 2 years, I'm making minimum payments to the mortgage. Okay. Making minimum payments to the mortgage. And what is going on here? We got two. Oh, you know what? I've got the wrong payment amount in here. Let me go back and fix this mortgage amount. All right. I got to reset this account. Hold on. Be right back. We got to reset this and make it right. Go here and reset the whole thing. Watch this. So we're pulling it all up. All right. There we go. There we go. All right. So now we go into the accounts and we take a look at the mortgage. $200,000 at 6%. The payment is $1,199.10. And we're going to take a look at it. And then I'm going to also put that in an amortization schedule. Look at this. Principal payments, $199.10. Look at this interest payment, $1,000. $1,000. So we're going to go in and duplicate this tab. We're going to put in the mortgage of $200,000 at 6% for 30 years. And we're going to calculate that. Now we come up with the very same payment, $1,199.10. Look at the total interest cost on this loan, $231,000 versus the interest cost on this loan is only $2,624 by comparison, $231,000. So the longer you have this loan, the more interest you're going to pay by far. Watch what we have here. So every month you make a payment here, you start out at $1,000. The next month it goes down to $999. The next month it goes down to $998. So you're making $900 payments on this mortgage while you're saving $80 payments, paying off the auto loan early using the debt snowball. So, Sonia, you tell me. I mean, Shauna, I look at your name and I've got to just say, this is not how I pronounce it. So, Shauna, do you see what I'm talking about here now that where we focus on interest cost instead of interest rate, where we focus on how to save money as opposed to how to pay off a particular loan fast so I can feel good about it?
I see the difference. It makes total sense. Thank you, Don, for explaining that.
Well, thank you for asking the question, because most people never get to see that. All right, Jared, back to you. Shonda, do you have another question for us?
No, I don't, but I'm going to be sticking around and listening and learning.
All right, thank you so very much. All right, Jared, back to you, sir.
All right. Thank you so much for that question, Chandra. Really appreciate it. And Don, one more time, if somebody wants to understand the month, date, and year that they can be debt free, how would they reach out with you to get in contact with your team?
Listen, folks, at the top of the screen, you see it right there. Click on that link. And if you can't see the link, if you're streaming, then you want to go to ICE. It stands for Interest Cancellation Expert, ICE 10klive.com. And you will see there a button that says Get a Savings and Earnings Report. Once you click on that button, you will be taken to my website. And then on my website, then you need just to plug in a little bit of information. We need to confirm your cell phone number. Once you click on confirm, you're going to receive a code. Take the code, put that into the website. That will let you into our financial form so that we can do a savings and earnings report. Put all your information in. Once you put your information in, then we will be able to tell you the month, day, and year you're going to be debt free and the interest you're going to save, and it will be optimized. Your interest savings will be optimized, meaning this is the most interest that anyone could save in your situation mathematically. So, and by doing that, that drives when you're going to be out of debt. Now, what do we do with those interest savings? We will talk to you about how to invest those interest savings into your own family bank. Oh my goodness, what a powerful move. So folks, that's what you would do next. All right, Jared, I think we've got some questions coming up on stage.
Yes, we do. Yes, we do. So Lakeisha and Percy, we'll get right to you after Lakeisha. We just want to go in the order of the people that came on stage. Lakeisha, thank you so much for coming to the stage. I saw your question on the chat and wanted you to come up so you can kind of give some more context. But her question on the chat was, how can I get started paying my mortgage in about a month's time? Lakeisha, if you could just clarify that question, and Don will be happy to break it down for you.
Hi, good morning, everyone.
Good morning.
I actually want to start off by saying, Don,
yes,
thank you so much. I've been listening for several months, even before getting a mortgage. So I've shared it. I've called persons in. I've done what you said, share it so that everyone can be in the same situation as myself, right? So right now I'm purchasing a home. So the mortgage will start next month, which is May 22nd. The purchase price is $269,900, and the interest rate is 3.69.
Okay, wait a second. I want to make sure I have it. It's $206,900.
Yes, $206,900.
All right, I'm putting it in on the screen as you speak. And your interest rate is how much?
3.69.
3.69. Okay, we've got it there. And it's a 30-year loan?
25 year.
25.
I'm in Canada.
Oh, you're in Canada. Okay. Yeah, that is a Canadian mortgage all day. All right. Got you.
Mhm.
Okay. Now, what's next? What do you need to know?
Principal and interest payment will be 1,358.
Mm-hmm.
But I've gone through I've watched you. I've learned, like, I've really dived in. So I just want to know when to start. I don't want to play around. I already know I need to get it done. I just need to jump on board and get it started.
All right.
I think you have the wrong number. It's 269.
206,000 or 269,000.
269,000.
There you go. 269,000.
Sorry about that.
269,000. Okay.
900.
And then, all right. And 269,900.
Yeah.
Okay. Got it. 269,900. All right. I've got $269,900 at 3.69 for 300 months instead of 360. And this calculator I'm using is an American calculator. Canadian mortgages are compounded semi-annually, and American mortgages are compounded monthly, so it's going to be slightly different. The concept is the same. The numbers are going to be slightly different. Okay.
Okay.
That's why you're going to see the different number here. So is there any particular question you want to ask about this?
I just want to know how to get started.
Okay. How you get started is you want to take a few notes. All right. So
yeah.
Go to ice10klive.com. And then you'll see a button there that says get a savings and earnings report. Once you click on that button, put in your follow the directions and put in all your financial information on the sheet that comes up. One of my staff will give you a call and prepare. We're going to prepare a savings and earnings report for you and then set up a consultation. Once we do that, then you'll know the month, day, and year you're going to be debt free. Now, it's usually within a 7 to 9 year window. Now, Canadian mortgages have to be recast every 5 years.
Yes.
So by the time you depending on the mortgage, depending on your situation. Now, some people actually get it done in about 5 years. So at most, you'll have to recast once on average. You should be done before you have to do it at year 10. You should be done with that mortgage on average. How about that?
Oh, that's exciting.
Yeah. And we're going to do that without you having to sacrifice lifestyle. You don't have to cut back on the lifestyle. We're going to show you how to use your current budget, the same budget that qualified for this loan. We're going to show you how to use that very same budget on killing tons of interest by paying the mortgage in a time that saves you interest and makes it impossible for your mortgage company to charge you that interest. There you go. That's how it's done.
I looked at the amortization table and I saw that not even half of what I'm paying, half of the payment amount will be going towards principal.
Right. And here's what it's going to be. All right. Now, on a Canadian mortgage, it's going to be a little bit different. All right. You're going to pay a little more principal than in 1 year than the $6,699.33 that I'm showing here, and a little less interest than the $9,800.46 $9,846.75 that I'm showing here. Okay. But it's still going to be in the $6,000 range plus and still in the $9,000 range plus. Okay. That's still a lot of money to pay an interest to pay down your principal, by $6,000.
Right.
And that's what we're going to attack. You do not have to pay all of this interest. We're going to cut your interest cost by about 75%. Now, do you have any other loans other than the mortgage that we can throw in here?
Yes,
Okay.
I have a line of credit.
Good. A lot of Canadians have a line of credit. We're going to put that into anything else.
And just a credit card at $3,000.
Yeah, let's throw it all in. let's save interest on it all.
Oh, sorry, I have a student loan as well at $10,000.
I'll put that in there too. And anything else you can think of. Listen, the more, the better. The more debt I can handle, the faster we actually get out of debt. Oh yeah, I know it sounds.
I need to see it in action, so I'm excited.
I know it sounds strange, but once you get into the program, I'm telling you, you are going to be amazed. And one of the things that most people see, it says we're knocking out our debt in record time, and we have more money in savings than we've ever had. While we're getting out of debt, we actually have more money in savings than we've ever had. I love that when that happens. So folks, you're going to be able to get out of debt faster, save interest, and save money in the bank all at the same time. And I know it sounds crazy, but it's true. When you see it for yourself, then you say, man, this is the best thing since sliced bread. All right, Miss Lakeisha, anything else this morning?
No, that's all for now. Thank you so much.
Listen, I can't wait to talk with you. And when you contact us, just let whoever you talk to, let them know that you talked to me in the P.I.L.L Method Club, and they'll take good care of you. Okay.
Okay. Thank you.
You're welcome. You're welcome. And Jared, I see Percy. I think I recognize that name.
John, you got to know me. Man. We was in the P.I.L.L. We was in it before with the P.I.L.L method together.
Percy Lowe, how are you doing, sir?
We was in the groundbreaking together.
That's right, man. That's right. What can I do for you today?
Okay, I know back then when you opened up the P.I.L.L method,
yes,
with the MMA, and I was still working with them guys. Are you still using a line of credit like my mentor showed me? Because in Texas,
nope. A line of credit. Hold on, Percy. Yeah. All right. Yeah. A line of credit is not necessary. You can use a line of credit, but most of my clients don't. Yeah, we've upgraded way past those days.
Okay, because I was asking because I know my mentor when I was in the program back in MMA, we was using a line of credit.
Yeah,
to speed the process up a little fast.
No, it actually does. The using the line of credit. Once you understand how an amortization schedule works, you see, back in those days, we did not drill down into how an amortization schedule actually worked. Okay. Once you understand that, then you understand that a line of credit may save you 2 or 3 months. That's it. Period. On average, having the line of credit, you pay off your loan by 2 or 3 months faster. That's all.
Okay.
Yeah.
So with that being said, then, because I'm about to buy 2 hotels.
Right.
In Houston, I know I'm gonna be in these hotels for at least about $25 million.
Okay.
I'm gonna get the program so you can train my chief financial officer how to work this program on these hotels.
Yes.
And that's what I was gonna do. Try to get like $1 million line and just sit on it.
Oh no.
Exactly like I knew how to do back in the day. Don't do that there.
No, sir. We're going to show you how, because any business owner you have to have cash available. You can have a line, okay, but you want to use it as to do maintenance. You have to have a system to do maintenance on your hotels, especially if you're looking at the age of the hotels. In fact, we have some people right there in Houston that I work with on the app that you probably need to know. Alvin Hope Johnson is one of them. Do you know Alvin?
No, I don't know Al.
I need to introduce you. But anyway, he's huge in the multifamily space and understanding how to put deals like this together. And what we're going to be looking at is you're going to have some money set aside in one form or another, either in cash or in a line, to make sure you can do the maintenance on these buildings. Correct?
Yeah, we're looking at about 1.5 for both of them. 1.5 million for both hotels.
We're going to show you how you can leverage that cash that you have sitting on the side to increase your profitability on these hotels, because now you're going to be able to acquire them at a much lower interest cost, not interest rate. Don't worry about the interest rate. Don't worry about the term. In fact, to train your people, listen, you need to contact us and then fly me in, and I'll do a complete training for your folks so that they can understand how to increase profitability by borrowing money at a severe discount. But guess what? We're not going to dip into the cash that you're bringing in that you intend to reinvest into other properties. We're not going to touch one dime of that money. How does that sound?
That sounds great, because the loan is going to be set up as an interest-only loan.
Oh, I love it. I love an interest-only loan. You know that.
I knew how to set it up. I knew how to set it up since I've been with the guys when they first started. I knew how to set up loans.
Yeah.
As an investor, you don't get a mortgage; you get an interest-only loan.
Yeah.
Jump in the program and eat it up.
Right. So yeah, we've improved that since the early days, and you're going to be excited about the improvements.
Okay, I'll get with you because I got your number. You back channel it to me. We'll talk, and when I get farther in the process and get all the terms and everything together, we'll get it, because everything I'm doing, even in real estate, it's all interest only. I do a non-recourse loan, interest only. Okay.
Well, listen, Percy, when we're talking, don't get too far into the process only to have it change when I show you there may be a better way to even set up these loans. So you want to bring me into the process sooner as opposed to later.
Piercy, I think you should do it now. Like just back channel them now and get them on board now. Like save yourself some interest money. I'm just saying.
Oh, I know, Dad. I know for 10 years I've been knowing that. I know I can get those from you.
Percy, do you have anything else for us, man? I haven't talked to you in years.
Well, we'll catch up. When we catch up, we'll do all that then.
Listen, right? I'm excited about coming to Texas now. Let's get that set up.
Okay, I'll get everything set up and talk with my crew, and we'll see what this guy had with his loan.
Good.
Then, matter of fact, I might bring you in while he's talking with me with the loan. We could do a 3-way or Zoom with him.
Yep.
And you can hear the whole loan details. Take it from there, and bring your guy in too.
Bring
you guys in on the call.
Oh yeah, listen. We've got several guys there in Texas that are familiar with what we do, and they're big in that multifamily hotel space. And listen, you're going to love meeting these guys and getting some ideas on how to not only do what you're doing, but they can learn from you. You can learn from them, and let's put a collaboration together where we can all level up. What do you say?
That's great, because I got a lot of connections to hotels. I got some people in the hotel, and they get them first hand before they even hit the market.
Come on, man. That's what we're talking about. Exactly. Percy, it's good to see you again. Good to hear from you. All right. Are you complete?
Yes.
All right. Jared, what's going on?
All right. And Don, we've been in here for an hour, and I think it would be a disservice if people didn't know about your best-selling book on Amazon. And then Colleen, we're going to get right to you. Thank you so much for coming on stage. But Don, please let people know about the bestseller on Amazon and what they can get out of it, and also the partnership you have with 10K.
All right. So Shauna is keeps talking about this book. So we're gonna put it right on the screen. All right. And it is the P.I.L.L method, a better way to eliminate debt. And I'm not going to talk about the book. Okay, I'm going to have it. Ms. Shauna, are you on the? Are you available?
Yes, I am. Sorry, had to dry my hands off. I'm cleaning. Go ahead.
That's quite all right.
I want to know about the book. When you get the book, you won't sleep. You'll toss and turn and think about all the money you've lost up to this point, and it'll give you nightmares. So Don will act like he's your friend on this page, but I'm telling you, he's going to cause you a few nightmares. But it's okay. We'll work through the nightmares with his little amateurization thing, because I guarantee you not all of us can math like him or his little computer thing. And then you'll be happy, and then you'll sleep like a queen.
Okay, folks, listen, she got the book, and you said you read it. You intended to read just one chapter. What happened?
Well, I had to read the whole book, and then I didn't get no sleep, and then I had to go clean on no sleep. But none of my investors know that I cleaned on no sleep. We won't tell them that.
Okay, let me ask you. You've been in the this isn't your first rodeo when it comes to loans. Have you ever seen any information like this before?
No, and I actually used to work in a loan department, so no, I haven't, and I was quite shocked. I was like, "Nah, this can't be true. This is BS." So it's not. I've checked it. It is not.
So let me ask you: since you've worked in a loan department, did the company you work for actually? Did they ever teach you how a loan actually operates, or did they just teach you how to sell their products?
They just teach you how to sell the product, and they teach you how to say the interest, but they don't really explain the interest. Like, if you just look at how much you pay on interest for a house, it's ridiculous. Like, once I saw the book and started looking into it, I was like, in some cases, you're paying more in interest than you're actually paying for your house.
Okay, so let me ask you this. As far as your training is concerned, when it comes to being a loan officer, people learning what they're learning about the P.I.L.L method in this room, should they go back to their loan officers to check and see if what I'm saying is true?
Honestly, they could, but I don't really think loan officers would know it, because I was a loan officer for 5 years and I had no clue. So I don't think they're taught that. So I don't think they would even know what you were talking about. And they probably give you glary eyes across the desk and think you're crazy. Like, I thought you were crazy.
But you bought the book anyhow. All right. Well,
you have to investigate. You're supposed to read 2 to 4 books a month.
Yes. Well, listen, I thank you for what you've said. I couldn't have said it any better. All right. And then once you get the book, folks, then what we want you to do is we want you to get a 10K card that goes along with it. Sean, 10K, are you in the house? All right. I guess he had to hop out. Sean, are you in the house? Sean Lashley.
Captain, what's up? Talk to me.
Listen, man, we're talking about the book now, and we're talking about our collaboration about with getting the book and the 10K card. What's so valuable about the 10K card?
I mean, Don, here's what I say. Back in the days, we used to use Telegram to communicate. We also used to use the horse and buggy. But then, today we have the Tesla, we have Lamborghini, we have Ferrari, we have Toyotas, Hondas. We have all these latest technology. So what the book does, it educates you as to how you can make your situation so much better for you and your family. That's number one. Number two, when you get onto the P.I.L.L method and you see the magic within it, now you're going to want to go tell everyone in the world who you are, what you do. And that's what a 10K card does. We put together your name, your number, your email, your social media, your website, all the links that you want to share with your audience and your potential clients. We put it all together for you guys, and that's what is a 10K card. So when you get a copy of Don's book, a 10K card is actually included in that purchase, and you'll be able to go show the world exactly who you are. So guys, take advantage of it. Most importantly, not only grab the information from the book, but share it with your friends and family, because you don't want to be on that progressive journey by yourself. Practice taking others with you. It's the fastest way to achieving massive wealth. So Don, Let's get these guys. Let's everyone to get a copy of their book. Let's make sure we get them their 10K card today, brother.
All right,
And Kenyatta is the best person to tell them how to go about doing it.
Miss Kenyatta, you in the house?
I definitely am, you guys. And so what you want to do is, after you purchase that book, screenshot that receipt. Go to ice10klive.com, go over to your right, choose down where it says, I'm ready. And that's where you want to go ahead and upload that receipt. You're going to build out your card to your specifications, including your website, email address, your phone number, social media handles. Let us know where to drop that card off to, and you'll receive your very own 10K digital card valued at $100.
All right. Hey, Jared, I see that Kenyatta, myself, and 10K have a particular avatar, a picture, a PTR. I want to ask Kenyatta about that after we talk with Miss Colleen, and we're going to talk about why our pictures are similar. Okay, let's go ahead, Jared.
Yes. The only reason my picture isn't similar is because I have the signature gray avatar in the hallway, and hopefully that brings in some of my friends. But I want them to recognize me. But I will actually be there as well.
I totally get the marketing.
yes. The hallway, I want them to know I'm in here. Come in. But anyways, Colleen, thank you so much for your patience. I love your avatar as well. Business Over Breakfast, big fan of the crew. Please let us know what your question is. We'd love to help.
Oh, good morning, everybody. Actually, I got invited up on stage, but you know what? I'll think about it. I'm sorry about that. Give me a few minutes because I'm sure I have some pretty good questions. We do have a mortgage on one of the properties we own, and I would love to get that paid off quicker. And I've just been listening and taking mental notes.
Well, listen, the reason why I brought Colleen up is because she is a master at what we call wholesaling. Colleen, can you tell us what wholesaling is and what that's all about? And now you're also getting into buy and hold, and tell us the difference.
Yeah, absolutely. So wholesaling is basically solving a seller's problem. Let's say that a seller has a vacant property. It's just sitting there. He's not making any money on it, but he still has to pay taxes. At this point, it's hurting him. It's not helping him. Maybe he lives out of state. He doesn't have time to fix it up. He would go through a realtor, but maybe he doesn't want to pay all those realtor fees. A wholesaler could come along, get that property under contract. Let's just use some example numbers. Let's say that my seller wants 10K. He wants to walk away with $10,000. Once I have him under contract, I'm going to market that property to buyers. If I find a buyer at $20,000, I make the difference. So I would make that 10K difference. I've been doing this for about 15 months, and I did 42 deals in my first year of wholesaling. I have no real estate license. I have no prior experience. I took a course off of Instagram. It was $4.99. It was from MIT215. Best course ever. Definitely changed my life. Now I'm getting more into the creative finance side. So originally, I was just making my assignment fees, helping sellers, getting their properties sold. But now I'm looking at the properties as something that could be an investment for myself. So I've structured 2 creative finance deals. And what that means is I worked out something creative with the seller. My seller originally wanted 20K for his one property. I said to him, what if I can give you 27? That's something we should talk about. And of course, he was curious. So I said to him, what if I gave you $27,000 over time? And if I default, you get your property back. So he has agreed to that. So I'm not using any credit, no money down, nothing out of pocket. I'm just simply signing a promissory note saying if I default, he gets his property back. Next week, we're going to close out. He has 2 properties for me. So I will become the owner of both properties. I will own the properties free and clear. Let's say my payment to him is $500 a month. Well, if I have the property rented for $1,500, I'm putting $1,000 of income in my pocket every month. 2 properties, that's $2,000. So that's it in a nutshell. If anybody has any questions about wholesaling, creative finance, I'm more than happy to help.
All right, Miss.
That is incredible, Colleen.
Thank you so much. I'm very excited. One is a 4-bedroom, 2-bath in the mountains, beautiful mountain views. Oh, I can't wait. I can't wait to close next week. I have so many plans for that one particular property. The other one, I just need to fix the porch and it's good to rent.
So, Colleen, I'm gonna put something up on the screen because that you've inspired us on that. I have a client here, so I'm going to change my screens here, and we're going to put up. I'm going to do this and share a new screen.
John.
Yes.
John, can we please bring up the fact that this superwoman has done all of this from a wheelchair?
Well,
so none of us have excuses.
I will let her talk about that while I bring up my next example. Miss Colleen, talk to us.
Yes. So I am a T7 paraplegic. I was shot when I was just 25 years old. I was at the peak of my entrepreneurial career. I was running a 6-figure a year business and I was living my best life, but I was shot and then carjacked, left permanently paralyzed. I was in a coma for 2 months, but when I woke up, the first thing I wanted was my laptop so I could get back to business. Absolutely no excuses. I don't make any. I could be bitter, but what would that do for my quality of life? If I was just sad and miserable and I sat in the house all day? No, you cannot keep me down. I'm always on the go. I'm actually in Ocean City, Maryland right now with my family. I just go with the flow. I'm making pretty good money now, so we could travel whenever we want. If we just want to take a family road trip, we just go. So definitely no excuses. And thank you for mentioning that. I love her. She's amazing. She's counting down the days. Every day she reminds me how many days are left. My mentorship opens back up. She has been cracking up, but it is closed up. But yes, so I am a T7 paraplegic. I am in very bad pain all the time. I'm in a wheelchair. I cannot walk. I have a lot of physical problems. I spend a lot of time in the hospital, but I bring my work with me. No excuses. There's no fun in excuses. I don't want to be that person that woe is me. I want to be that person that inspires people, that motivates people. And I will call you out. If you're making a silly excuse, I will remind you I'm getting it done from a wheelchair. So that's my take. I land my plane. Thank you.
So, Colleen, tell us about, did you have to go through some sort of transition as far as your mindset is concerned? After you woke up, you got your laptop, and you went back to work. But did you have to develop a new mindset at all?
Oh yeah, everything. It wasn't like I just woke up and everything was back to normal. Not at all. That first year, it was extremely hard for me. Extremely, as positive as I can be, I was very, very depressed. I was so independent, and to go from being so independent. Just a little background.
Yes.
When I was younger, my mother's very bad on drugs. My dad died in prison, and I was taken away from my mom. She was super abusive. I grew up in foster care, group homes. So when I turned 18, I was on my own. I had to hustle. I had to work. I had to do whatever it took to make sure I fed me. So when I was 25, I was super independent. Nobody could do anything for me. I didn't want anything from any man. I'm still that way. But to get shot and have to, I'm very, my husband would be like, I'm paying for it. I got it. And then sometimes he has to be like, no, I got it. But yeah, to go through that and to have to rely on someone for everything, like even to get out of bed, I needed help. Everything I did, I needed to ask somebody else. So that first year was so hard for me. And I'd be lying if I said that I didn't contemplate suicide more than once. I was broken. I couldn't even hear loud noises. I wasn't myself at all. I was so traumatized, and I couldn't even listen to music, the music that I loved. It loud sounds and everything just scared me. So it was very, very, very tough. But you know what turned everything around for me? I found out I was pregnant. My husband and I, we tried for years we weren't lucky. But 1 year after I was shot, a doctor said, "Did you know you were pregnant?" I'm like, "Huh? Wait, are you talking to me? You mean me in this wheelchair? How is that going to work?" But the second I found out I was pregnant, it was no longer about me. I couldn't be depressed anymore. I had a child to worry about. So that is what saved my life, because I was definitely in a dark place. And then after that, it was just, all right, let's hustle. Let's get this money. I got to take care of this kid. So that is what really turned me around.
Well, listen, Colleen, thank you for sharing that. And the reason why I asked you, because I've heard your story before. I've heard other stories on Clubhouse and on YouTube about the mindset that it takes to not only develop a business, but get through the hard times. You were successful before you got shot, and now you're successful afterwards, even working from your wheelchair. Phenomenal, phenomenal story about how mindset gets you to where you need to be. We prepared a little video. It's just a little over a minute about mindset. I want to play it right now, and then we're going to talk about our avatars that we have on Clubhouse right now. Then we're going to talk why these pictures are the way they are. Can we roll that a little bit of that clip on mindset, please?
In these uncertain times, the pandemic is still fresh on our minds. Gas and food prices increasing, and talk of Web 3.0 and the metaverse delight some and strike terror in others. Entrepreneurs, once enthusiastic about the future, now question the calling on their life. Some will find answers online, others will turn to trends and fads, but the real solution is a change in mindset. Your mindset is a set of beliefs that shape how you make sense of the world and yourself. It influences how you think, feel, and behave in any given situation. If mindset shapes all of that, then what influences mindset? Our answer: exposure. Exposure to a new environment. Exposure to experiences from those who have seen this before. Exposure to what works for those with proven track records that what they're doing is working. P.I.L.L Method Seminars presents Developing a Spiritual Money Mindset. 3 days at the Gaylord Opryland Resort in Nashville, Tennessee, where you'll be exposed to leaders in real estate, leaders in the metaverse, leaders in building a financial legacy. Expose yourself to the top motivational speaker in the world, Dr. Eric Thomas, in person. It's all happening May 20th through 22nd. Go to ice10kevents.com to purchase your ticket today.
And this time, I want to share with you just a little bit more about mindset from my mindset coach. Is my mindset coach in the building right about now? Sean 10K, are you there? All right, listen. So
he's looking for Easter eggs.
Listen,
he's hoping to find the golden one.
Oh, can I say one more thing about mindset?
Please do, Colleen. Please do.
Yes. So, okay. So I've always been an entrepreneur, always made sure I was making money. But 2020, I lost my best friend to suicide. I couldn't handle that. It broke me. I could not handle that. And normally when something bad happens in my life, I just throw myself into work. That is when I took the wholesale course and I locked all the way in. But I had to change my mindset or nothing was going to change for me. I was hanging around the wrong people. I was hanging around people that just wanted to talk about people. And I just wanted to talk about slaves. I felt completely drained after every interaction. My anxiety was high. Something was not right with my spirit. I knew something was wrong. I had to separate myself from that crowd. So a lot of people say, oh, you did 42 deals your first year of wholesaling. But what they don't talk about is the 3 friends I lost along that journey. No, I do not miss them. And I don't care if that's mean or cruel. It's about me. It's about me right now. For so long, it was about everybody else. And I sat in rooms I did not want to be in. And I took my power back and I said, this is my year of no. I'm going to say no to every little event, every little party, every little gathering, because I am on a mission.
And if I don't get serious about this mission, I will stay in the same financial situation. It wasn't like I was struggling. We were doing good, but I want to be very wealthy. I cannot hold myself back. I cannot hold my family back to make other people happy. So I got very, very serious. I stopped listening to music. The only thing I played in my car was audiobooks. I got into rooms like this, just like this. No scrolling on the shade room. No, I want to be here. I want to be here and be humble and learn from people that are way more experienced than me. And I want to give them their flowers. So that was huge for me in my mindset. I think that really changed everything for me, reading audiobooks or listening to audiobooks. And I had not in years. But I got very, very serious about my goals. And because of that, everything has changed for me. So if you have a goal that you're chasing, sometimes you got to tell your friends, no, maybe that's not the crowd for you. One thing my instructor, Mitt, always says, if you hang around 4 broke people, you'll be the 5th.
Oh, my
You'll
goodness.
be the 5th. If you know you're different, like it's a feeling we have. I feel like there's a certain select group of people, and they're in this room right now. It's an uncomfortable feeling when you're sitting at a table and nobody's talking about ideas. Nobody's talking about ways to make money. They're talking about dumb shit that will make you nothing. Get up from that table, walk the fuck away, and never go back. You will feel a million times better. Do you know how many friends replaced those 3 pointless friends? Probably about 13. Ambitious millionaires, entrepreneurs, people that actually put me on and teach me things, and I could add value to their business, and we brainstorm and mastermind together. I don't miss them at all. Not at all. Don't be afraid to do something for yourself. Nobody's opinions are going to pay your bills. Don't hold yourself back from your goals to please other people. Close those doors, and I promise God will reward you.
Wow, Colleen, thank you so very much for that. Do you know, folks, I have 2 mindset coaches, and we've heard from one today. We're getting ready to hear from the other one. I have another coach, and he happens to be the #1 mindset coach in the entire world, the #1 motivational speaker in the entire world. It is E.T., the hip hop preacher. He's going to be there at our seminar in May. We're going to be talking about that in just a minute, but let's hear from E.T. right now.
This is an opportunity of a lifetime. Your grandma counting on you to do the right thing. Your mama counting on you. Your cousins, your brothers and sisters are counting on you to cash in on this opportunity. Everybody want to be a beast. Until it's time to do what beasts do. There are kids that don't get what they don't eat like you eat. They're at the same university. They don't get what you get. But with this right here, your skill set, this thing can take you wherever you want to go and then take your kids wherever you want them to go. You know how many people would die to have the gear y'all got? You know how many people would die to get on these planes and travel the world? You know how many people would die to have your life? And you got it. Let's go. You got money, but do you got that dog? Yeah, you got money, you got privilege, but do you got that dog? Do you got that stamina? So yeah, you might have something I don't have right now, but if I work hard, I can have what you have. I want you to chant it out. This is it. Be phenomenal or be forgotten. 1, 2, 3. Be phenomenal, be forgotten. 1, 2, 3. Be phenomenal, be forgotten. Last time. 1, 2, 3. Be phenomenal, be forgotten.
With us, Miss Kenyatta, are you in the house right now?
I am indeed.
Talk to us why you have that picture up there with you on it, pictured with Eric Thomas and myself. Talk to us about that.
Because I want to be phenomenal and not forgotten. It's real simple. We talk heavily, Don, in the book and everything that we do to create a mindset. And I really appreciate what you've been in my life. But also some of the people that I'm going to be sharing space and time with, like Jared and Alicia Cooper, better known as Miss Cooper Home Loans, Jonathan Bing. I can call them family, but outside of that, you guys, the mindset that these people have is bar none. And I'm listening to the conversation, and I was just thinking about how I replaced my people that was talking about a whole lot of nothing. just by coming to events like the one we're having in Nashville. And now my network is looking more like I've always desired and wanted. I can have conversations about the metaverse. I can have conversations about NFTs and not know a thing about it, but because my friends do, I now have the knowledge, and I just think a lot of times we take for granted what networking can do. Don, me and you met at a networking event.
Yes.
And so when we talk about spiritual money mindset, it's a double fold. You're actually going to be learning new streams of income, like learning how to have new streams of income, and you get to be around people that think and talk like you, or either what you aspire to be thinking about. So I hope to meet you because I know the value of partnerships and friendships, and I can't wait to see you guys.
All right, folks, that's what's happening there. She's going to be there. I'm going to be there. This is May 20 through the 22nd. The tickets are on sale right now. You want to make sure you get yours. The most valuable ticket right now, the most popular, is the VIP experience, where you'll be able to meet with at dinner the Saturday night with just the speakers, just the VIPs will be in that room dinner.
And Don,
yes.
Don, let me just let you know,
Come on.
to let everybody know that those tickets are almost gone. And so those are the tickets that I always go for, you guys, because it'll be in the room. We're talking 500 participants, but that dinner, only a select few will get the chance to have. And so I just want to let y'all know that they're almost gone.
Wow. Listen, folks, this is what we're talking about. Please, please, please go ahead and get signed up right now. And here's what I want you also to know. I want you to know what's not going to happen at this conference. Okay. I've seen online right now where they have conferences that start out with a price point just to get you in the room. There's two things going on with that particular price point. You don't have access to all the information. You get 6 point, but by the time you want all of the information, you're spending way more money. That's number one. Number two, when you get into the room at that low price point, guess what? They're going to have tables set up at the back of the room, across the doors, and you have to pass by their cash registers where they want to sell you their $5,000, $10,000, or $15,000 package just to get out of the room. You got to walk past that. So we're not doing that either. We're not there to upsell you. Okay. You will have access to all of the information at all price points. We're not trying to give you. Now, what we are going to give you is more access to the speakers at different price points. But all of the information from all of the speakers, everybody gets access to that. And I'm telling you, even at the end, when most people are just kind of winding down after the last speaker on Sunday, we're going to have a celebratory dinner with all the participants, with the speakers, and everyone who has any kind of ticket is invited to that dinner on Sunday night. Listen, we want to give you access to all of this so that you can be phenomenal or be forgotten. We want to level up your mindset. That's why we're entitled this, developing a spiritual money mindset. And I can't wait. I can't wait to see you there. All right, Jared, back to you. Do we have some folks? Oh, and I think we have a question online as well. I'm barely hearing you, Jared.
Hey, I'm here. Don, I got a quick question for you.
All right, go ahead, Mike.
Okay, I listen to your show a lot. I love the knowledge that you drop on us, trying to pay off your house in 7 years. Quick question on that. If a house note's $1,000 and the formula you shows, for example, just pay $800 extra on top of that a month to help pay off quicker. What about if you just pay your house note, take that $100, that would be extra cash flow for the month, and use that as an investment? Would you recommend that too?
Okay, I'm trying to understand your question. See if you can break that down for me a little bit better.
You were just giving feedback when you was talking.
Yeah, something's going on. I'm still
Everybody
hearing that
heard
echo.
me, right?
Yeah, I heard you. Kenyatta, can you hear me okay?
I can hear you fine.
Okay.
Hey, John, you're on mute right now on Clubhouse. You just got to unmute on Clubhouse.
All right. Well, somehow I'm getting an echo now that I wasn't getting before. All right, we'll see if we can fix that. So, Mike, go ahead with your question one more time. Help me to understand it.
Okay, I was saying, just say your house note's $1,000.
Yep.
Okay, and you use the calculation that you would give. For example, just say $800 extra on top of that $1,000. So now you're paying $1,800 a month to pay off your house way quicker using your calculation. What would be your advice if I would just pay that $1,000, keep the $800 as cash flow, and use that $800 to invest in something else? Would do you recommend something like that too?
I see what you're saying. Okay, number one, you were describing somebody else's plan. You weren't describing the P.I.L. method. We don't put extra money on debt every single month. That's number one. Okay. Let me give you a quick.
Oh, okay.
Let me tell you a quick example. We don't do it every month. We only do it at strategic times during the year. A lot of times, you're just going to be making your regular monthly mortgage payment, the minimum payment. That's
I
it.
didn't know that.
Yeah. Yeah. So here's the thing. Like I said before, you didn't know this, but we've said it at other times. You've got to get rid of the old ideas about how loans work. Okay. Number one, when you're paying if you were doing that $800 a month extra, would you know by making that one single payment how much interest you're saving?
Yeah, I mean, I would have an idea what I'm saving. Like, for example, to be honest, right now, like my house note's $1,300. I've been paying $2,000 on it,
right,
like, for the last 2 years.
So here's my question: when you just make one extra payment, do you know exactly how much interest you're saving? That's my question.
No, not paying one extra payment.
There
I'm
you
not showing the exact interest.
So this is why we've come into this space, because you should know how much interest you're saving when you just make one extra payment, so you'll know exactly how much to pay, because that matters. Because you're not just saving interest and saving time. What you want to know is how much interest can I save per dollar? Let's just say you could save $6 in interest for every dollar you apply extra. So let's say you put an extra $500 down. So it says, okay, now that I could figure that out, I put extra $500 down. Now, based on that, how much interest did I save per dollar? You see where I'm going here?
Yeah, you're looking at the interest per dollar. Okay, I see what you're doing.
So now, if I could save $6 in interest per dollar, now that's a whole lot of money, isn't it? Times 500.
Yeah, absolutely.
Okay. Yeah. But what if I did it in such a way that I'm only saving $3 in interest for every dollar?
And you're cutting it in half.
Exactly.
Pretty much.
Now, here's my last question. How would I know the difference?
You need that schedule calculator, right?
There you go.
You see, all I was doing was I was dumping, that extra $700 a month every single month, because I got a 20-year loan. But now I started buying rental property, and I'm closing next week on my ninth deal.
Right.
I kind of cut back from $2,000 to about $1,600 to use extra money. But I'm still paying extra on my house. I won't knock it out.
All right. So here's what I did with one of my clients. Okay. So I'm going to put this on the screen. All right. And he's got a couple on just two of these loans. It's over $2 million. Okay. Just two of these. All right. And so what he told me was, when we put all of this together, his mortgages on these two loans come to about $14,000 a month. Okay, but he's cash flowing $40,000 a month. Okay, are you hearing me?
Oh yeah, I'm here.
Okay, so that's what we're doing. So he says, now, Don, when we do this, I didn't pay attention to how much interest I was paying before until I read your book. But even though I'm paying a lot of interest, and I know you're going to save me interest, here's what I want to do. Okay, I want to make sure that when it's all said and done, I'm paying $14,000 but I am receiving $40,000. So what is that? $26,000 difference. That's pretty good money, isn't it?
Like yeah.
All right. So now he says, now I want to save money and interest, but I want 20,000 of those dollars to go into investment. I don't want to pay any of that money towards paying down the loans or saving interest. I want to reinvest my money. Is that what you're talking about?
Yeah, similar to what you're saying right now. Yeah.
Okay. So that left me about $6,000 to work with. See, the reason why he said that is because he has a reserve fund. He's putting $6,000 away every month into this reserve fund. And it's just sitting in the bank. So a lot of real estate investors keep a reserve fund for maintenance and repairs. True?
Yeah, I guess some of them do. I don't do that. I keep all my real estate in one account. I just let it build up.
Right. So you still, but you do have a certain amount of money that you want to be able to invest, and you have a certain amount of money.
Yeah.
Okay. So once you figure out how much money that you want to invest out of that, you're not going to invest all of it because now you're left with no cash, correct?
Yeah. Well, what I do, Don, is I keep all my real estate money in my real estate fund.
Mm-hmm.
I have a full-time job.
Right.
And I have a lawn business. So what I do is, since that's earned income, I'll take my full-time job money.
Mm-hmm.
I'll take my lawn money.
Mm-hmm.
I'll pay what I got to pay. I take the rest off and I put it in a savings and I let it build up. And as a property come up and I can find, I use that money, hurry and buy it. And then I just keep letting the real estate build up, and I'll just keep using my earned income to buy real estate.
Right. Well, see, we're still saying the same thing. So my question is, would you ever use all of that money to buy real estate at one time?
No, I wouldn't.
Exactly. You're going to keep some back, correct?
Absolutely.
So then you have a formula of sorts of how much you want to keep in reserve and how much you want to spend on real estate.
Yeah, to an extent, yeah.
So if you came to me and says, Don, I need to know that I can always have money to invest in real estate. You can't touch this much money. How's that sound?
Correct.
Okay. So now let's just work with the little bit we have left. How's that sound?
Yeah, it sounds good.
Okay. So here's what we did with this guy. All right. He's got two loans here. One of them I'm putting on the screen right now. And you're probably not in a position to be at a computer, are you, right now, to watch my example?
No.
That's all right.
I'm actually exercising.
All right. Well, you can watch it on the replay. All right. So in 2 months on one of these loans, he's paid it down by $7,374.92, but it cost him $4,000 in interest to do that. $4,600 in interest. You see, before he was thinking, why do I care? Because my the tenants are paying for the mortgage and I get to keep the difference. He wasn't thinking about that before. On this second mortgage, it was 37 after 37 months. He's paid it down by $99,795. That's how much equity he's been able to create in 37 months just by paying it down. But the interest he paid is $222,000 to get that equity. Does it now make a difference how much interest you're paying to get that equity when you start adding it up?
Oh, yeah, that makes sense. Yeah, you definitely want that equity.
Okay, so here's what we're talking about. I'm going to put I'm going to go ahead and put one of these loans. It was $1,250,000. Okay. And I'm going to put it on the screen here. I'm going to change screens, and then you'll be able to see this on the replay. And then I'm going to describe for you what we did for him. All right. So, all right. So we're going to share a new screen. All right. I love this system. All right. And share screen. And there we go. All right. So here's what we're going to do. We're going to put in $1,250,000. Uh-oh, I hit the wrong button. Okay, and it's 5%, all right, and 360 payments. Okay, and by the way, I never recommend. I always get the longest term possible. Okay, some real estate some real estate will only let you go 25 years at the most. So whatever you can get, always get the longest term. Never get a shorter term, because you may.
Yeah, my lenders only let me go 20.
Yeah, then we'll take the 20, but never take less than the 20. Okay.
Okay.
All right.
It's at 4.5%. So.
Yeah, and again I'm going to tell you, we probably need to talk a little bit, because then I'm going to say a slightly higher interest rate is actually going to help you instead of hurt you. The lower the interest rate, the lower the interest rate, the harder it is to pay this loan off early. Yeah.
Okay.
All right. So here we have $1,250,000. Okay. And at 5% for 30 years, and this payment is $6,710.27. Okay. When we break this thing down, the amount of money that goes to principal is $1,500 in the first payment and $5,208.33 in interest. When you receive your rents, this is what I asked this gentleman. When you receive your rents, how much of that money is yours? He said, all of it. And I said, how much of it do you want to keep? He said, as much as I can. Okay. And I said, now that you saw that in the first 37 months on this loan, that you paid you paid it down by 99,000, but it cost you 222,000 in interest. Do you think that's a little bit too much interest to pay for $99,000 in equity? So he says,
that's a lot of money.
Yeah, he says, well, what can I do with it? Now, let me show you. Now, we're just showing you the first month. No, the first year on this loan. On this particular loan, at 5%, $1,250,000, he's going to pay this thing down by $18,442 by doing what he used to do, just focusing in on the cash flow, which was significant, and he loved it. All right. But it costs $62,000 in interest the very first year. Okay. So let me ask you. So that's that's $80,000. $80,000 paid out in 1 year to get $18,000. So if I came to you, Mike, and I said, Mike, I got an investment for you. I need you to invest $80,000 with me for a year. And when you do, I guarantee you that all you're going to get back is 18 grand. The rest of the money is gone. Do you want to invest with me?
I don't know. Probably not.
Probably not. Okay. Because you invest 80 grand and all you got is
80 grand. I'm only getting back 18.
That's it.
No, I would do.
This is how we do our mortgages. We're investing. But
So if I give you,
go ahead.
Oh, I was gonna tell you, I'm about to sign off in a week.
Yeah.
I know exactly what my loan's gonna be.
Yeah.
Would I be able to give you that number and you tell me what I should pay to help me like that?
I can tell you exactly, but I would have to. I can tell you how to understand it. My program does all the math. I don't do,
okay.
but I'm just giving you some basics here. All right. So now
Yeah.
he's going to pay down this loan in $18,000 in 1 year. That's all the principal payments added up. The $1,500 payments for 1 year come to $18,442.07. You follow me so far?
Yeah, he only went from $1,050,000 to $1,028,000, huh? 32.
Yes,
like
yeah,
32.
yeah, it's right there. Yeah, $1,231,000 exactly. Okay. So now here's what we're talking about. He's got, based on the small amounts of money he's putting away into his reserve account, he's got about $100,000 in there. That's just in the reserve account. That's how much money he's got. The rest of his money he's reinvesting. He's very happy with that system. So I asked him, I said, with this loan, the way it's set up, you know you're going to pay $18,442 in 1 year. Do you have to pay it in 12 monthly installments? Guess what he said?
Yeah.
No, he said no. He said, I don't have to pay it in 12 monthly installments. I said, if you had the $18,000, could you pay it all at one time in 1 month instead of over 12 months? He said,
Dump it
yeah.
all in 1 month.
Yeah. So what would happen if he gave the bank the $18,442 on line 1? Would he be paid down to line 12 in just 1 month? What do you think, Mike?
Yeah, he would be.
Okay.
You could dump it all in. You're going to pay way more on the principal than the interest in one payment like that.
Right. So what would happen to?
Correct.
Yep. What would happen to all the $5,000 interest payments between line 2 and line 12? What would happen to those?
All of it would go to principal.
No,
would knock that completely out.
You would knock that interest money completely out. So here's what's happening. If he gave that bank that $18,000 all at one time, you know how much interest they would charge him to pay it down to the very same place of $1,231,557.93? It would only cost him $5,208.33 in interest instead of the $62,000 they want to charge him.
Good Lord.
Good Lord. That's right.
It's amazing how that interest calculator works.
Now, here's my next question. Now that you know this, even though you're cash flowing on your properties, can we justify paying out $80,000 just to get $18,400 paid down on the loan? Can we justify that now?
Oh, no. No, you can't.
Now, here's what I want to also point out. Remember how much he's putting in his reserve fund?
$6,000.
$6,000. And I said, if you took $18,000 out to do this, to save yourself $56,000 in interest, almost $57,000 in interest, and pay your loan down to the exact same place you would if you paid it like you've been doing over 1 year, then how long would it take you to pay yourself back the $18,000 you took out of your reserve account? How long would it take you to pay yourself back?
Well, if he's making $40,000 cash flow in a month.
Yeah. So he's putting six.
He'll do it in two.
No, he's putting
$6,000. He'll do it in 3 months.
In 3 months. And I said, in 3 months, could you do the same thing again?
Oh, then he's saving over $100,000 just in interest in 2 months. Oh. Yeah. And then he's building more equity at the same time.
He's building equity faster and cheaper when he was cash flowing the whole time, just like you are. And that question you asked me says, Dad, how can I, basically you were asking, how can I continue to invest and save money and interest? This is how you do it.
Exactly right. Yep.
And we can put a plan together for you where you would plug everything into our computer system, and the computer system would you say, okay, you tell us the parameters you want us to work with, and then we'll tell you how to do exactly what you want to do, but we'll show you how to optimize what you want to do to make sure you save the maximum amount of interest that's possible. Does he put extra money on his debt every single month? No, he does not. only at strategic times during the year where it's going to save him the most amount of money in interest per dollar applied.
Okay. But I do know one method.
Yes.
Whatever your note is,
Mhm.
take that note, divide by 12, and whatever that number comes out to be, you put that every month, put that extra every month, and it pays a whole house note a year. I do know that method.
Right. And what's going to happen is here's what we lose sight of, and this is what the bank wants us to lose sight of. When you're purchasing a property, you never lose sight of what you pay for it, do you?
No.
You have to know, because that's where you make your money when you buy the property. Correct?
Yeah, it's an asset.
Exactly. So if we don't lose sight of what we pay for the property, but the bank is successful in getting us to lose sight of what we pay to borrow money, then they are at an advantage and we are at a disadvantage if we don't pay attention to what we pay to borrow the money.
Oh, yeah, exactly.
And so we can't just look at the interest rate. We have to look at the interest cost. And if we look at the interest cost, now we can come up with a plan where we could buy this property. Now, here's what I did for this guy. I'm going to go back and we're going to put this back on the screen, and I'm going to tell you the rest of the story like Paul Harvey used to say. Okay? Okay. Let's go back and put the rest of that story on. We're going to share on another screen. And this is what I did for him. So he was saying, now here's his old plan was to pay off the $2,236,376 in 21.9 years. And it was going to cost him $1,123,195 in interest to do it. But he was cash flowing every month and he was satisfied. But we're going to show him how to pay off everything in 4.9 years. And he's only going to pay out $243,000. He's going to save over $800,000 in interest to acquire the same asset and not touch a penny of the money that's earmarked for investing. What can he do now with that $800,000 in interest money he's no longer paying that he used to count as the cost of doing business?
Well, he can reinvest that. Very simple.
There you go. That's what we do here, sir. All that money we're paying in interest is not necessary. So he's acquiring the same asset at a discount of $891,726.
Sure.
All the interest money he does not have to pay now.
And that's not paying. See, that's the formula I got to use. That's what I don't know. I only know the method of putting extra every payment.
Mm-hmm.
I don't know a formula where you do it every so many payments. I don't know that formula. I just know the formula every payment.
Right. So here's what the bank is using. They have a formula that's it's a complicated formula that their computers figure out for them. Why not have a formula? Why not fight fire with fire? Why not have computer against computer? Their computer charges interest one way. Why not have your own computer that says, oh, this is what the bank is doing. This is what I have to work with. How can I best get to zero debt or save the maximum amount of interest that I possibly can with the money that I have to work with? Think of it more like a financial GPS. Instead of having a paper map to get to where you want to go, why not just plug in, your destination?
My destination is going to send me straight there.
Yep. And the program is going to tell you, oh, do this, pay this much money in this month on this day of the month, and attack this particular loan, and you will be okay. And they'll tell you exactly how much interest you could save. And we can go drill down even deeper and know that what's that you make that move, it's the most money you could save per dollar. How about that?
Man, yeah, you got it figured out.
All right, Mike, listen, we've got to get out of here. Listen, folks, I want to thank you so very much for being here this morning. So some of you are here on Easter Sunday, and we want to thank you. Jared, listen, I know you've got to run, and so I'll shut the room down. So Jared's going to stay here as long as he can. Is that right, Jared?
That's right, man. I appreciate it. Happy Easter, everybody. And thank you so much for being here. Make sure you follow the greenhouse at the top. And also make sure you follow Don. Click that bell next to the follow button and click that always on. He's in the best real estate financial advising rooms on Clubhouse. And also definitely, click on 10K, Credit Goddess, Kenyatta, and Colleen. Give them all a follow as well. And that way you can see their amazing rooms in the hallway. So yeah, my quick outro, Jared Albritton, been in tech for 15 plus years. Love to talk about tech, metaverse, NFTs, crypto. Check me out on Instagram, Twitter, LinkedIn. You can also check out my 10K card, jared10k.com for everything else that I'm up to. All right, so back to you, Don.
All right, folks, we're going to be right back here on Monday morning. So listen, tap the greenhouse above, follow all of your moderators, and so that you will know, and click that bell so that always follow, so that put the always on, so that you'll know whenever any of us are in a room, you can get this fabulous information. We're going to do 30-second outros. We're going to start with Miss Colleen and move our way. I'm sorry. Yes, Miss Colleen, if you go with a 30-second outro, we're going to end the room today, and we're going to hear from Eric Thomas, which will be our last speaker. Let's go ahead.
Okay, thank you so much. Colleen here, real estate investor out of Philadelphia. I'm going to end by saying, do something for yourself today, right? It's Easter. Of course, you're going to do something for the kids, but do something that'll get you closer to your goals today. Whether it's showing up to more rooms like this, networking with the right people, just do something for you today. That's it. Everybody have a blessed day.
Thank you very much. Miss Kenyatta.
As always, we appreciate your presence and pray that we've earned the privilege of your time. And there's amazing things that's brewing. You already have the jewels that you need to attack this inflation and interest costs rising. But if you need more, tap in with me, Kenyatta, at kenyatta10k.com, and I can assist you. Happy Sunday.
All right, Credit Goddess, you're up.
Hey everyone, happy Easter, happy Sunday everyone. If you guys are interested in any of my services, definitely tap in with me, text your name and email address to the number in my bio. Let me know if you're interested in personal credit or business credit. I do have a business credit scan. Just by answering those questions, I can see where you are in your business credit journey, whether you need funding right away or whether you need to establish business credibility. Just by answering that question will help me identify where you are in the process. So that way we can get you some funding under your business. So definitely tap in with me, whether it's personal or business, and I'll send you the link to get you started on your credit journey. Thank you guys so much for being here, and we'll see you tomorrow, Monday at 8 a.m. Eastern.
All right, 10K cards. You're up, my brother. All right, he's probably talking to a client. So listen, folks, I've got one last question here. But this is from Angel Files King, and it says, would the P.I.L.L method apply if I'm almost ready to purchase my second home? Most definitely. Listen, if you're ready to purchase a second home, and in fact, even if you're renting out your first home, okay, you're renting out, let's say you don't sell it, but you rent it out and you get a brand new 30-year mortgage. Our average client pays off their current home in about 7 to 9 years. If you get a brand new 30-year mortgage and you have a renter, the average time added onto your 7 years is 2 to 3 years for a brand new 30-year mortgage on top. What? Not an extra 30 years. No, an extra 2 to 3 years on average. Have both homes paid off in about 10. So please reach out to me at ice10klive.com, ice10klive.com, and then get a savings and earnings report. We will definitely help you with that second home. So folks, we're going to be right back here tomorrow. I love the fact that you were here today. Keep sharing the room. Keep sharing the love. Go to ICE 10K videos. Click on the subscribe button on YouTube, and then like the videos and share this information with everyone. We need your help. And be with us next month, May 20th through the 22nd. All right. Get your tickets early for our conference held at the Gaylord. All right. Opryland Resort. We're going to have speakers on Friday. We're going to have speakers on the Sunday. And in the middle, you'll be able to enjoy the resort as well. I want to see your face in the place in May, but we're going to be right back here tomorrow. So let's hear from Eric Thomas as he takes us out.
This is an opportunity of a lifetime. Your grandma counting on you to do the right thing. Your mama counting on you. Your cousins, your brothers and sisters are counting on you to cash in on this opportunity. Everybody want to be a beast until it's time to do what beasts do. There are kids that don't get what they don't eat like you eat. They're at the same university. They don't get what you get. But with this right here, your skill set, this thing can take you wherever you want to go and then take your kids wherever you want them to go. You know how many people would die to have the gear y'all got? You know how many people would die to get on these planes and travel the world? You know how many people would die to have your life? And you got it. Let's go. You got money, but do you got that dog? Yeah, you got money, you got privilege, but do you got that dog? Do you got that stamina? So yeah, you might have something I don't have right now, but if I work hard, I can have what you have. I want you to chant it out. This is it. Be phenomenal or be forgotten. 1, 2, 3. Be phenomenal, be forgotten. 1, 2, 3. Be phenomenal, be forgotten. Last time. 1, 2, 3. Be phenomenal, be forgotten.